expert analysts and retail traders host a number of daily webinars focusing on fraud. Change your shampoo right now if you don't want it at all. The shampoo you're using has the same ingredients as dish soap. There's no need to worry about receding hairlines or a thinning crown anywhere.
Morning, afternoon, and evening. Doc here from North America. What do we got going on today? You can see there's the Swiss trading in the 92s, 92.44 there you can see. And we see oh, that's Russell over there. Let's get the Chicago Quant going at the same time. There it is. And you can see the Swiss there just down a little bit. So that means the dollar is a little bit weaker today. But we are playing with the third day in a daily buy. And obviously we've been in a weekly buy now for 3 weeks, going on a fourth. So it's the end of the year. It's the only thing I can, make any common sense out of, in the sense that, the way they move. And I just seen, as a matter of fact, I just saw the markets make dramatic moves. No more than like about, an hour ago. Just like out of nowhere, just launched. So, one moment they're being sold down, and the next moment they just reach up again. There's so much capital that needs to come in before the end of the year. It just has that, I wouldn't call it the Santa Claus rally anymore, since, the Federal Reserve and everything else in the world see only one direction, and that is up, up, and away. So it's, to me, the Santa Claus rally used to mean something in the sense that somebody asked me about it, I guess about 3 or 4 days ago, or 2 or 3 days ago, and I said, I don't know. If we go on a weekly buy, it's going up, and if we, if it's in a weekly sell, then it's more than likely finding a way to go down. In this case here, we see the stock markets themselves kind of just going up. It's they sell it down. It gives opportunity for those. We keep on telling you, or we keep on saying in the webinar here, that there's a pile of capital that needs to get in by the end of the year, and it's anywhere between 7 and 15 billion a day, which is a lot of money in the stock market. In the currency market, it's nowhere near the same. It's a very small slice, 7 billion, or 14 billion, or 15 billion, that type of thing. But in the stock market, that is literally the size of a day. So there's a lot of equity that needs to come in and get into position. They're incorporated to invest that money, and if they're not invested by the end of the year, then it looks like they're not doing their job. So that's part of the problem right there alone for them. And they've dodged being this much long throughout the whole year, so they've got to be able to say we're fully invested by the end of the year. And even when if you look through their balance sheets, you find out that they were not fully invested throughout the whole year. But it doesn't really matter. It's a year-to-year basis type thing, so it is what it is. Back to the currencies, you see the Swiss moving just a little down, and playing that top end of the range right there. And you can see it over here on J4X. It's still a little green. It'll start to shift soon. But you see the white lines here and here, right there. Both of them very firm, moving up. Let's jump over to the euro this morning and see what that's up to. I did see it was in a daily sell yesterday, and I believe it's still there this morning. Right there. You can see it's a little bit higher today than it was yesterday. It's in a daily sell again for the 4th day now. And you can see on J4X, lots of red, and a little white line just below the dash, just like our white line here. Right there is below the histogram. And the weekly, just dragging on, since the push from here. So, and again, I want to throw this out there because when I say this and I look at the chart, I want to say at the same time, it's December 8th. We have basically 3 weeks left, I guess you could say, 15 trading days, something like that. It's 22 days, 23 days, is it, of the markets to going into next year. So with taxes and accounting, these things are forced to execute even when it's illogical to do so. I mean, who really wants to plow billions of dollars into a marketplace at the all-time highs? Obviously, just the instinct alone normally would make someone cringe at the idea. Um, it's not, it's not the way that people like to invest or have been investing a lot, throughout the hundreds of years. They like to buy lows and sell highs. I'm sure some of you have heard that expression. But in this era of quantitative easing, it's buy high and then buy higher and then buy higher again. It's momentum. Lots of heavy, aggressive momentum transactions. All right, from the euro, since there's not much to be said about the euro, you can see the cable. Let's see what the cable's doing this morning. That is fascinating when you look at the fact check spreadsheet. I think we're really long. Look at that. 13 days right there. 13 days in a daily sell. It's been pushing down. You can see today was a lot more pressure there. And let's put it up. That's on the J4X. You can see it's trying to make a little curve there. So let's see what it does over on Chicago. And it must be down towards the bottom end of the range. So yeah, there you go. It's hitting the black line. It's gone and hit that 130, 191 area. And it's been pressing down since the weekly. Oh, I didn't mean to do that. Right there. The weekly sell right there. And the daily sell since right there. And the pressure's on there also, obviously. I think matter of fact, yesterday I think we titled the webinar about, was it yesterday I did it? Where majors and minor pairs trades seem to be analogous to each other anymore. It used to be a time where major pairs traded all over, very actively, and there was plenty of volume. And in the minor pairs trades, we used to refer to it as trade by appointment. You have to wait for a trade, for somebody to make a bid or an offer. And these times, with quantitative easing, there's a standing bid and offer out everywhere. Just part of the quantum, the QE universe, the quantitative easing universe. And so that's the interesting. Okay, there we go. Let's jump from there, and that's interesting in the sense of the cable. It's playing now with that bottom end of what we think is the range. We'll find out very soon. See if it comes back to the blue line here. As you can see here, this can be a characteristic of a bottom or a top too when it's it's way up. With this up and down, up and down, up and down. And if it actually broke the zero line on a couple of these and it came back down again, that's really an indication of some type of bottoming pattern. You can see the weekly is trying to curve itself here. So this might be the beginning. They may bounce off of this area. We'll see how today goes and closes, and then see if we can get into a daily buy. And if we get into a daily buy with the weekly sell, and then it tries to climb back to the zero line on the weekly, then that is the bottom end of this big. Let's just show you what we think is the range here. And that is basically from the 142s all the way down to the 132s. We think this is the actual natural range that the QE people want it to be. I guess that's the best way to describe it. Or the best way, I guess the best way is central banks. What the central banks want, the central banks will get. All right. Now from here we go over to the Turkish Lira, which is a fascinating laboratory type of experiment. Watching a currency, we've been watching that currency go from the 1.5 to the where's it at now? The 13s, 13.5. So this has been a very fascinating watching then Prime Minister Erdogan, who is now President Erdogan. This has been a policy of his, and in some ways I thought a few months ago, I think I came to the conclusion that it's not that he's devaluing the assets to make Greece a destination for foreign money. but I think it's more for the European Union. I'm starting to think that more and more. I'm not sure exactly what gave me that odd thought. Probably saw something that made me think that. And I think it was because we were watching the euro against the Turkish lira, and it's more accurate than the dollar against the Turkish lira. And because of that, I started thinking, maybe all this devaluing of the Turkish lira is based off of the idea that to have more trade and more functionality with the European Union, because they have drifted. Remember, Turkey was very close to becoming part of the European Union. I mean, it was very close, and it all fell apart. Erdogan basically altered that path. Say, he changed that direction, and because of that, this might be the only way to get the European investors involved into Turkey and transacting and have friendly agreements with the European Union in general. Just an incredibly cheap Turkish lira. Just incredibly cheap. So, you gotta wonder. I mean, when you were 1.5 to the euro, and now you're 15.5 to the euro. What does that do to Europe? Not what it does to Turkey. We already know the pain and suffering that goes to Turkey from it. But what does that do to Europe? It makes Europe look at Turkey closer and say, we want them as a trading partner. You can get assets much cheaper. You can get items, inventory, and manufactured goods. Turkey is a more of a first world economy. So I don't know if they're part of the OECD. Let me just check that. That would be interesting. I don't think they are, but let's take a look and see. Is Turkey part of the OECD? Turkey is one of the 20 founding members of the OECD. Okay, yeah. OECD has 37 members. Yeah. So you would consider Turkey a developed. That's what the symbol represents. Organization of economically economic cooperative or developed countries, something like that. Here, I'll give you the full name of the OECD. But it's not, it's not, and I can reload. Israel's in there, and Europe is in there, and so forth and so on. So it's definitely something to be thought about. When with the OECD, you just put it in there. Organization of. Let's see, meaning. Okay, here we go. Organization of Economic and Cooperation Development is an international organization that works to build better policies for better lives. And they do some, it's a solid group. Let's see, let me just, it would be interesting to see what countries, let's see, OECD, 37 members. The list of the 37 members, but they're very solid countries and very solid economic systems. So seeing the Turkish lira lose so much value, I don't know if there's anybody in there that's gotten that beat up over the years. I'll have to look into that over the webinars, next webinar. I'll do some research on that. But yeah, This has done it. The euro itself against the Turkish lira has made me think that that's part of his policy. At least that's what I think. I mean, how do you even try to define when you see a currency go from 1.5 to 15.5, and it's part of the OECD? So something's brewing there. I don't see Mr. Erdogan, President Erdogan, being that foolish. In the sense of, I imagine he has a plan. There must be some strategy there somewhere along the line, or maybe I don't know, maybe he's lost it. I don't know. Who knows? But in the end result is it's definitely something to think about. All right, and from there we slide over to the Canadian, right there. And you can see the Canadian all of a sudden is making a really interesting shift down. We got right up to almost touched the top end of the range, and it just, you can see that right there. Got close to the top end of the range, and it's just rolling over. Still in that weekly buy, but we've been in a daily sell since this big topping in here. So that's pretty cool. Let's put it up on J4X. Right there. Yeah, the OECD nations, are pretty productive. I want to get the list of them and just look through them. Maybe we'll do that tomorrow and see. Has any of those countries seen their currency drop like this? It's a unique thing in its own right, All right. Let's see. So now Canadian, as you can see, pressing down, and normally when we see the Canadian doing that move down, usually it is a sign of stronger oil and stronger metals. Let's see. I'm still looking at the OECD countries. Which OECD member countries? Okay, let's try that. See, Australia's in there. Austria's in there. Belgium, Canada, Chile, Colombia, Costa Rica, Czech Republic, Denmark, Estonia, Finland, France, Germany, Greece, Hungary, Iceland, Israel, Ireland, Italy, Japan, Korea, Latvia, Lithuania, Luxembourg, Mexico, the Netherlands, New Zealand, Norway, Poland, and Portugal, and why don't I see Turkey in there? It said Turkey was in there. Maybe it's some type of odd member state. Maybe I'm wrong. What the OECD 38 members are? I could have sworn I saw it said Turkey was one of them. Why am I not seeing that in here? So, okay, now I have to really investigate this. Maybe they're not part of the OECD. Interesting. All right. Anyway, let's jump from the Canadian over to the gold and the oil and see what they're doing with that. Oh, there we go. Hey, Jordan, you mentioned the balance sheet. Spent a few years learning accounting and correcting the balance sheet. Then I wanted to invest to increase the asset column. Don't we all? I agree. I hear you there. Yeah. I had a good conversation yesterday with a friend that is, I guess you could say, semi-retired. I don't know if traders, members of exchanges, ever become retired. I guess what it is, we work less during a trading day, and but we're still trading at the same time. We're involved in the marketplace. It's kind of like it's kind of interesting. Traders are not exactly people who just walk away from the marketplace. At least most of the traders I know have not. No matter what age they are, they're still involved every day because it's a very dynamic, thing, a cutting edge type of thing. And so we were talking about the balance sheet yesterday. He was telling me that he was talking with this friend, and I guess it was like last year and during the crash of the COVID in February and March, going into April. And the guy said, he had some extra cash laying around, and he said, I want to get long this mark. I want to learn how to invest. Guy had another business, and he made millions from that. He said, I want to learn how to invest. So my friend shows him how to invest, and they go out and they buy all these interesting companies, like a Procter and Gamble, all these Fortune 500 types and some smaller companies, but overall solid companies with a good balance sheet, as you're just saying there. And he makes I don't know, $4 or $5 million from it, and so then he takes the $4 or $5 million, he plows it into a bunch of junk names, and now he's lost like $3 or $4 million from it. We were talking. He was telling me this story yesterday, and so then he says, you know, he looks at one company, and he says it's got like it generates something like $4 million a month in income, or is it a quarter? I think it's a quarter. $4 million a quarter in income, but it's valued at $500 million, and it's like, no, you don't buy junk like that. And now the stock is like, you know, down in the tubes, and the guy's lost about $1 million in that alone. He's like, he says, like, you know, you got to learn how to read a balance sheet. That's what you need to do. And the guy's like, well, can you help me? I started trying to do it myself, and I blew up. So the guy can afford to lose 3 or 4 million, so there's no problem there. But it was funny, you know, just funny that you mentioned the balance sheet this morning. And a friend of mine, he called me, like I said, from Florida yesterday. He was talking to me about it. And it's definitely something funny to think about, in the sense that how do you invest not using a balance sheet? But they do. This is the era. QE kind of removes that. I mean, you know, that's what it comes down to. Anyhow, there we are. We're at the Canadian. Let's take a look at gold to start off with this morning. I saw it earlier today. It looked firm. So there's gold. It's up a little bit. Let's move it over to. Let's see, let's find it over on the Chicago side of it. You can see a little green here for a couple days, white line through. And then let's show you what it looks like on the Chicago side. We are still battling, trying to get into that buy. At one point this morning it was definitely higher. You can see that. We'll widen that out a little bit for you. But the J4X is saying, don't worry, be happy, be long. And we have down here on the Chicago side of it, was through the zero line on the minus for the weekly. Now it seems to be trying to turn up again. We're through the plus. So yeah, Jordan, reading a balance sheet is an important thing. Yeah, I hear you. I took a course in it when I was at the exchange. I went over to Rutgers University and I took a couple of classes. Because I was math and physics background, so I figured, let me do that. So I took I took a financial accounting course without having taken accounting. The professor said, "Oh, you're a member of the exchange?" I said, "Yeah." He said, I'll let you in my class. He says, "You already understand most of this, don't you?" He says, "Aren't you wasting your time here?" I was like, "No, I just figured I'd, do financial accounting just to get a better flavor of it all." So he let me into the class, because you had to have like accounting 1 and 2, I think, to have financial accounting. But since I was a member of the exchange in the equity markets, he kind of automatically assumed I had that type of nature without having the classes. It was very good. I got an A in the class. I enjoyed it. But financial accounting is it's not much more different than the regular accounting. It's just that you look and see the tricks of the taxation and the laws, how to adjust for, how to keep the balance sheet clean. That was the pre-era before there was EBITDA and EBITDA. They are expressions of accounting with tax and inflation and future earnings and cash flow, which were not part of really cash flow is looked at in accounting, financial accounting, but wasn't looked at as a component to earnings. And now EBITDA, that's what that is that's combined into it. They had to come up with something to adjust for the internet companies. Back then, and especially in the 90s, that's when they created it. Back in the late 90s, EBITDA and DIBIDA, they're legitimate accounting expressions. What they are is they're an acronym for. Let's see if I'll read it to you. It's an educational day, it seems like. Let's see. EBITDA. Earnings before interest, taxation, and depreciation. EBITDA stands for earnings before interest, taxes, depreciation, and amortization, because the margin ignores the impact of non-operating factors such as interest expenses, taxes, or intangible assets. The result is a metric that is more accurate reflecting of a firm's operating profitability. And then, and so, what it was doing is it's capturing the cash flow basically. So it's measuring the financial performance in a philosophical way, I guess you could say, but it's a grounded philosophical way. You know, because you're looking at what did I say? You're looking at earnings before interest and taxes and depreciation. And so, in other words, these internet companies at the time had earnings, but then when they paid their taxes and they had interest costs and depreciation, they were losing money. And for the longest time, financial accounting and balance sheets were just that. That's all they cared about: earnings and productivity. And so that became a much stronger investment tool. And I forget what the D in front of it does. There's a dibida. And so that's, I know that sounds funny. When I mention, sometimes I'll be like, having drinks or something with some friends, and I'll say something about that, and they'll go like, "Yeah, I heard about that. What is that?" And they're like, I have one friend that's involved in the back office of a major I don't know what you want to call them now. They're a mutual fund, they're a hedge fund, they have a brokerage house that I don't want to mention the name of, but they're big name company. I have a lot of respect for the brokerage house that they've merged with. What else? Else is it? The two mutual funds they've merged with are just outstanding mutual funds for decades. But he runs the software side in the back of this $2 billion company, and I mentioned it to him, and he was like, "Yeah, what is that EBITDA stuff?" Anyway, that's where we are. All right, let's take a look at what did I do? I shifted over to, there's gold. You can see gold is trying to stay firm. It has fallen again. That's why I had the green line there for a while this morning when we sent it out the charts, because it was that high up and it was moving. And we've removed the little red dots down here on the weekly because gold is firming up in here. Over here on the J4, actually you can see the green. He's strong for a couple of days here now, and you can see the white line piercing the dashed line with no problem whatsoever. Yeah, exactly. Well, they've taken a few things out of the American school system. They've taken out civics, so you don't know how government works, and they've taken that removes understanding the Constitution. You don't know how the Constitution works and how the laws work. And then what else have they taken out? They've taken out a few things. Economics. They've removed a lot. They try to dumb down the population. I guess that's the best way to describe it. Don't think it really works, but they'll fail at it at the end because people really want to know what information is. I mean, they want the information in the end. So you see how Robinhood works and a few of these others. Bought a book called Rich Dad, Poor Dad in 2018. Found online accounting course. Spent probably a year just reading balance sheets and income statements. Now have a positive net worth thanks to that book. Yeah, that was I was very happy to see that book. I mean, like you got to figure my offspring, my children are, are successful besides the things I've done to help them, but they're successful because they grew up around the financial community, so they understand it. So I mean, that it's important when you're not raised or around people who understand finance. They have no idea. They think the banks are evil, and they don't understand how the banks work to begin with. By you reading that, you realize that borrowing and lending and that's the structure of America to expand dreams and imagination and ideas and creativity. That's what it's all about. I was saying that to some engineer over in Europe a couple days ago. Living in freedom allows incredible amounts of ideas and dreams and illusions and concepts to flow through your head for you to want to. I mean, you see all the creativity, like the cell phones, and just a lot of creativity of engineering and science. And when you have less taxes and you have more freedom, you do those things. And when you have more taxes and less freedom, you steer clear of it. It makes it hard for you to do it. I recommend anybody to read Rich Dad, Poor Dad. Definitely. It's well worth reading, without a doubt. All right, let's see, where are we at now? Let's jump over to the oil sector. See what that looks like. There's the June oil. Still holding firm in here. It's looking good. There's January oil. That's the front month. That'll be for another week or so. The weekly, you can see it's trying to turn up. It's on that. I don't know what I just grabbed there, but either way. What is that? Whatever's going on here, you can see one thing for sure, and that is that the weekly is trying to move back up. The histogram is trying to get past the bottom manifold, so that's always a positive thing right there. And let's take a look at it over on J4X, right there. As you can see there, the where's it at? Right there. There we go. You can see the white line piercing the dashed line. You see three hinkies there, just the same way as gold, with the oils trying to move up. And we have, you see here over on our Chicago quant, we went into the weekly sell back in here, and we could see here the daily buy occurred 3 days back, and it's showing some firmness and so forth. So it's hard to believe that they'll sell this down too much. Remember, we're at the window dressing. I've been warning everybody for 3 weeks now. We're in the window dressing period. That's what I'm sure you've heard of the concept window dressing. Matter of fact, why don't I Google that? Let's do that one. Let's Google financial window dressing. Because that happens every year forever and ever. Quantitative easing doesn't seem to interfere with that one, I can tell you that. Let's see. Financial window dressing. Here we go. Financial window dressing. Cash postpone paying suppliers so that the period end cash balance appears higher. Accounts receivable. It's a lot of different combinations of that. Let's see. Funds. Let's see. How about mutual funds? Mutual fund window dressing. Definition. Window dressing is a strategy used by mutual funds and other portfolio managers to improve their appearance of a fund's performance before presenting it. Yeah, exactly. So what happens is we develop two measures of window dressing that are based on reported fund holdings and returns, more specifically proposed both at a relative. What is window dressing? Mutual funds, Wall Street Journal, 2014. This somewhat disparaging term is used to describe the practice of a mutual fund making cosmetic changes to its portfolio just before the end of the year. That's the one I was looking for. Stock market, ignore last week's window dressing. 2018. It is a strategy used by mutual funds and other portfolio managers near the year end or quarter end to improve appearance. It's not as much as a money maker as much as it makes it looks like you're managing the money better. That's what it comes down to. And let's see what else we got going on there. So that's why I keep on reminding people, going into the last 6-7 weeks of this time of the year, the window dressing can be very tenacious, pretty wild, especially right after week before Thanksgiving, or after Thanksgiving. It starts to get really nuts, depending on when Thanksgiving falls. All right, from there we're going to slip back to the currencies for a little bit. We're going to finish off the last 4 currency pairs that we watch. And if anybody wants to see anything, usually Jordan's there saying stuff. Jordan's welcome to, and if he wants to see something or she wants to see something, you're welcome to. we'll put it up there at a moment's notice. Let's go take a look at the South African rand. Since the metals complex is kind of sideways, you would assume that the currency itself is somewhat sideways. You know, not really going anywhere particular. There it is right there. And so you can see it is dropping down a little bit. That's nice. Maybe it's a little sign of some strength, or again, window dressing. Anything's possible. You see here we've been in a weekly buy, so all the way back in here. So, you know, the pressure has been on the upside. Let's look at it over here on J4X. Right there. And so, you know, we're pressing into a daily sell over there on Chicago, and you can see the same thing going on with J4X. The pressure's on there too. Oh, I don't completely understand how to read the cash flow statement, but can always learn it at a later date. Pretty focused on learning how to trade. The cash flow, again, depending on the sector, you know, in other words, you would, let's say you're looking at General Motors or Procter and Gamble. In other words, a Fortune 500 company that has a consistency, or you know, Volkswagen or something like that. You know, what else is there? Like, you know, IBM. You know, that type of thing. And you look at the cash flow, and that's a little bit simpler. And interest rates don't have as much an effect on those type of industries as the interest rate effect on, say, Apple or Amazon or Google or Facebook. The tech companies are, you know, even Intel, are very interest rate sensitive, because they borrow a lot of money and their outlays go on. I mean, I forget who's built. Someone's building a new factory in Texas. It's a $17 billion, not 17 million, $17 billion enterprise. You know, it's costing whoever it is. It might be Apple doing it. You know, it's costing them $17 billion to build this thing. And so, when you're in an industry, I mean, you know, like Procter and Gamble or IBM, you know, they were nowhere near that type of issue. I mean, obviously IBM, yes, because they need chips and they're a tech company, but they are nowhere near like Intel, who just manufacture chips, and it's an expensive process. Matter of fact, I think it's a chip factory they're building. It's and it costs $17 billion to build. And it's like, wow. So that's why they're interest sensitive. So that's why you have EBITDA. EBITDA, they have that, you know, earnings before. Let me see if I can find it again. EBITDA is a changed accounting concept. You know, you're looking at earnings before interest and taxes and depreciation and amortization. So you're looking at a raw number, and when you're spreading that out over $17 billion of investing in one project over X amount of years, they kind of remove that, thinking you don't know what the interest rates are going to be, you don't know what the taxation is going to be, you don't know what type of government depreciation or amortization change. Trump changed the depreciation amortization his first year in office, and the economy exploded on the upside. So in other words, when you allow companies to subtract expenses at a faster rate, it's like a tax cut in a sense, and then that's why they cut out those things. That's why you have EBITDA, EBITDA. It's an accounting process. I know it sounds crazy, but that's why you have it. You know, and so these tech companies are very, very expensive to be. So, all right, from the South African rand, we jump over to the ruble. You see the ruble jumped up for a couple days. Looks like it's trying to curve again. We are in a weekly buy, as you can see right here. You know, you can see that right there, where, you know, it moved up. Maybe this. I have a hard time believing there's an invasion coming. I just kind of think they're just going to rattle the poor Ukraine and Mr. Biden in particular. When you've got a president of the United States like Biden, anything can go on stupidly. You know, so. But I kind of think that. I keep on expecting the ruble to do much better down the road, that's for sure. All right. From there, we take and let's put it. Let's put it on J4X too, just to get a better flavor. There's the ruble right there. And you can see the curve we have here. We're having the same curve there. And you can see we're a couple green dots there over the days. And you can see that there's two there, and they're starting to already turn down there. So, all right, yeah, and I like your Jordan. I like your idea. The way you're looking at it. Don't completely understand how to read the cash flow statements. Over time, if you read I've stopped reading the Wall Street Journal a long time ago, but if you read Barron's and Wall Street Journal, it'll make a lot more sense to you. They talk about earnings and so forth all the time. That's what they do. They focus in on it. And the Financial Times also. Financial Times is very good at it also. And there's a Canadian paper, a Canadian financial that's very good also. I hear rings. Who's doing that? Let's see. All right, now, let me just answer that. All right, let's see. From the ruble, we jump over to the yen. Let's see, where are you, yen? Right there. And let's see. The yen, you can see on J4X trying to turn up, which is usually a sign of strong dollar, weak yen. And let's take a look at it over on Chicago Quant. There, same situation as you see right here. The white line moving up. We've been through it for 2 full days. They're doing the same thing on that. You see the greens on the hinky, and you can see that's the interesting part right there. Is the weekly is starting to be pierced. So Mr. and Mrs. Dollar are acting stronger. Oh, excuse me, I have to take a sip of tea. Is there any tea left? I was really busy this morning. Reading about stuff and answering some stuff. So I was busy to the point where I already finished 1 cup of tea and I was working on a second. Oh, that's good. So let's see, where do we go from here? From here we jump over to, where is it at? We go to this is the yen. So from the yen, we drive ourselves to the Mexican peso. And that's the last of the pairs trades that we look at normally. And then if you care to see any pairs trade, just fire it out on the chat line. We'll go take a look at it. And it doesn't have to be at the end of our currencies. I'm willing to stop what I'm doing and go chase it either way. I find it fascinating to just look at anything. I would love to see my math doing all kinds of stuff. All right, from the Mexican peso, you can see here lots of red. It's doing the same thing right here on a Chicago Quant. We've been marking that off because it lifted through and developed a whole new range, which was, not sure. We kind of tie it to that meeting that Mr. Trump and the President of Mexico and the Prime Minister of Canada had. But overall, their currencies all marched the same way. Now they're starting to move back down again against the dollar, which is cool. And so there's the Mexican peso showing a little life. Jumped into the weekly buy, you can see right there, and ripped up, and it was in a daily buy from there. Just refused to let go until where did it go into the sell? We don't have the sell on there. We went into the sell right there. Let's put that in there. There's the sell. What makes a sell for those that are watching is when you drop below the 0 line right here. Jump below the 0 line. That's the white line, and the histogram is minus. Tells you that it's going down in value. Now, in a situation here where it's in the weekly buy, the best you want to do is just take a profit unless you're trading binaries or options. Then you can have an option position on because, or binary position on because they're limited risk. But when you're trading the hard, the spot or the hard delta as we refer to it, then if you're going to be naked long, you better be in a weekly buy before you jump in. So when we went into the weekly buy, daily buy here, and we were in a weekly sell, we're saying wait. And then when it closes into the weekly buy and starts to show the strength in it right there, we put the mark at the end of each week, so it could have gone into it in the middle of it. But we don't give it the confirm until that. So you can jump in and do the options at that point or the binaries, and then next thing you know is like it's winner chicken dinner. So that's at 8.5 out of 10 times our math does that. It's a pretty good average there. All right. Let's see. That finishes off our currency pairs unless you'd like to see something. Hey, Middle Age. There's a crop report coming out. What is it? Didn't you say it was Thursday? Today's Wednesday, right? Let me just double check the calendar. Yeah, today's Wednesday. Yeah, so want to see what Mr. Wheat is doing. Let's see what Mr. Wheat is doing. Yeah, we're seeing some interesting shakes and bakes from that sector. Let's see. Let me entertain you. Let me make you smile. All right, here it comes. And what we'll do is over on J4X, we will put the soybean up there. There it is right there. As you can see here, Jan Bean's been acting kind of firm. See it right there. Today they are flirting with the daily sell as we speak. Been in daily buy for a couple of days, and we've been in the weekly buy since back in here. So it's not really going anywhere. I mean, it did go higher, and then it went lower. Now it went higher. Now we're trapped in the middle there again. You can see we went to a daily sell right there, and so you couldn't be long from this unless it was through the options and binaries. And then it smacked down, and then we've started to drive back up again here. So at this point in time, you'll see we're seeing some weakness on the soybean side of it. Let's see what the wheat looks like. And there's March wheat. March wheat is kind of flatlined just the same way. Hasn't made the pop. We were in the daily buy. I'm not sure why that's the line for the daily buy. It should be, I guess, right there. Not sure what's going on. I have to go back and check. Something's happened. I saw some data change, but you can see here, this is interesting, is that now look at that. Some data changed, and we've pushed ourselves into the weekly sell out of nowhere. I'll have to go back and clean this data up. Someone put something in there at the exchange, and all of a sudden it's changed some of our parameters, it looks like. And you can see the daily buy, it's climbing back into the weekly there. Let's go take a look at a couple of other wheats. So let's see what the June wheat looks like. Where's that at? We'll look at corn too. I'll tell you, everybody's got winter wheat planted, that's for sure. Everybody. There's July wheat. Now that doesn't seem to be as distorted, but then I don't see the line on it there either. What's up with that? And this one did not get pushed back into a weekly sell of some form over the last 24 hours. Don't understand that. You can see easily how well it's looking up. And so that's what the wheat is doing. And then let's just take a look at March corn. March corn acting very well. Yeah, there's another one that's done that. It's like they plowed some data into this stuff. It's looking weird. All these things were plus. Now all of a sudden they're minus out of nowhere. So it's very strange. You see the weekly trend is healthy. We're going to have to go back and look at some of this stuff. See if we can straighten some of this out. See why it's doing that. Corn. I tried to fix one of them this morning, and the numbers were that skewed, which I was confused by. So the exchange has changed a lot of data out of nowhere. And there's Maycorn. You can see the Maycorn's showing life out of it. I hope that helps you. All right. Let's see. What are we doing next? Stock indices. Oh, you know what we do? Take a little bit closer look at the metals. Let's see what silver's doing this morning. And there is silver. Yeah. See now, is that right? What's on our fact check spreadsheet? I thought silver was like in a sell for days here. I am totally confused what's going on here. Yeah, 13 days in a daily sell. Now there, all of a sudden, is trying to tell us that silver's in a buy for 3 days. I'll give this a refresh. See what that does. Some of the strangest stuff I've seen in a while. Let's go back a couple days. We're going to have to go through all these things. These things are looking incredibly ugly in the sense of they don't make any sense. Our lines were in there and they were going up and we were in daily buys, and then all of a sudden you get this. So all of a sudden silver's in a buy for 3 days, going on a third day out of nowhere. We're going to have to hunt that down and see what has changed. Somewheres along the line, somewhere around here, the exchange has changed data and it's disseminating all new values. So I hate when that happens. It drives me crazy. But they do that. Sometimes 4 or 5 days can go by, and then all of a sudden they just load up data that doesn't match what we've seen for days. The exchanges do this. Something about the black pools. They try to slide the volume in, and it's not in a right sequence. So what happens is it changes the whole character. And I'm happy to see silver up. Trust me. I'm very happy with that. But I'm not, I'm in a weekly sell, and we've been in a daily sell for 13 days. And now all of a sudden, it's trying to tell us we're in a daily buy for the last 2 days. So I'm happy to see that. That's nice. It's climbing back up to here, which is cool. So we'll have to go and look at the charts. I see it everywhere on my futures today. So, they have what they refer to as black pools. You have the black pools in the stocks, and you have the black pools in the futures. And that's what's so nice about the currencies. There's no black pools that hide stuff. So maybe in the futures, but not in the spot. That's why we follow the spot, not the futures. And so over in the other two, though, in the stocks and in the futures, sometimes they do these transactions, and they're not allowed to by law. You can't do a transaction of a public company and not report the trade instantly. Yeah, instantly. I'm going to use that word one more time. Instantly. You're supposed to report it the moment it transacts. It's part of the law about being a public company. And the same thing with the futures. You're not supposed to make a transaction on a futures contract without reporting that transaction instantly. But they have these black pools that the CFTC and the Securities Exchange Commission allow to execute trades so that the customers can hide them. And then what happens is that they're supposed to put them in at the end of the day, but they don't. They've allowed them to put them in days later, and sometimes it's even like a week later they put them in. And in other words, they've already traded. They just finally, at the exchange, through the clearinghouse and everything, they reflect the trade. And so, they're trying to hide the action. And so they put it in at the wrong time of the day. They put the prices in at the wrong time of the day when they actually happened. And what it does is it alters my math. My math picks it up. So in other words, we've been in a sell since here. Remember, it's a daily chart. It's not an intraday chart. So in other words, we get a volatility signal here. Okay, that's fine. And then we get, a lower day again here, but it throws it into a buy now, whereas before it was in a sell. Then this pops up, and we were very close yesterday of getting into a buy. And then, today now the value of it's going down again. So, in other words, I don't see any clear sailing on the upside right now, even with them playing with their black pools. So, I think we might label this webinar that too: black pools and their actions to the markets. The charts. Maybe that's the way to look at it, through the charts. anyhow, let's see where are we at this point. So that is silver. Let's see what now copper. Let's see how copper looks. Copper looked fine this morning. Yeah. So it's acting well. The Blackpool, whatever the Blackpool is doing over there, they didn't do that. I'm telling you, most of them have that weird. In gold, you can see gold is all right. Went into the sell. I guess was it here, and then right there, and then so what you got is you got the sell down, but we're in a weekly buy, so that's been a real weird thing too. Now this morning they're trying to push on this. Matter of fact, I thought it was kind of interesting is that the weekly was way down to here, so they must have plowed something into the gold futures too for the window dressing, and like you're saying there, middle age, yeah. So again, traders, I've warned everybody at this time of the year, these last 6 weeks, I keep on saying, don't get so aggressive about trading, because this is the sloppiest time in the year right now. Could you explain what a spoofing means or how it works? I hear people talking about when a market drops hard. Yeah, well, I guess it's kind of like what they do is they create a rumor. The rumor goes out, and I guess that's the best way to describe the spoofing. And then it's not true. So it gives them a chance to buy. They put out a bad story that forces things down in value. They get a chance to buy it, and then it goes up. Like what you're talking about for tomorrow. That there's a crop report, and there might be rumors coming from a spot where you can't tell exactly from about the crop report, and it scares the markets a little bit. Some lighten up, and they get a chance to buy. And then next thing you know, it's back up again. Just like the virus was last Friday. Was it last Friday? 2 Fridays ago now. So the Friday after Thanksgiving, they put a report, a COVID thing out there out of nowhere. The Omicron kills the market dramatically. And now where's the market? Take a look at like here. Let's take a look at the stock markets, and then we'll call it a day. But that's the classic of it all. So you have like the Dow Jones Industrial Average right there. You have that day, that's where the spoofing occurs, right, with nobody around. Slams the market down for a couple days. They get a chance to buy, and where are we now? Right back to where it started from. That's the Dow Jones Industrial Average. Let's look at the S&P 500. Here's the S&P, same situation. It's the same situation there. So what happens is that the spoof comes out, takes it, the close there. So what have they done? Over a week and a half, they've just put it right back to where it started from, before that spoofing story, which people are like, Omicron's not bad. It's just actually it's a weaker virus. And you can see the same thing, right? What's that line there? Let's remove that. And so what you see here, same thing, is they finally come back to it, and they had a chance to buy. And so that's the same thing now. Let's see. Let's take a look at the Russell too. I don't understand what the one thing that did surprise me was the Bitcoin. Why the Bitcoin melted away? You would think that would have been a flight to safety. You can see the Russell 2000, same situation. Wherever, right here was Thanksgiving. American markets are closed. They put out the Omicron story on a enormously short day of only a few hours, crushes the market for a few days, and here we are back to that point again. All right, and then let me just do the Bitcoin real quick like that. There's the Bitcoin, and let's see back here. That's that day. Now Bitcoin has not come back, which is kind of surprising. Doc here from North America saying, "Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Catch you later, traders. See you tomorrow on the day before Friday. Ta-ta."